Good morning, traders. This is Perry. Good morning, traders. This is Perry Wilkie with StartUpTrading.com. It is 9 a.m. Eastern Time on Wednesday, September 25th. Sorry about that. I got distracted, lost track of time here. So I'll make this quick. You could actually just replay yesterday's video, save a lot of time. Nothing has changed, in my opinion. So we went. The title of my video is from a 3-day to a 4-day balance. Uh, and I had, talked about this as a risk for this week. Not that it's a risk. I mean, it's just the way the market behaves. That any time that the market went down, uh, that you know that means the VIX probably spiked up a smidgen, and institutions going into Friday, and maybe they're worried about tomorrow morning. There's final GDP rent read tomorrow morning. We'll get into news here in a second, but that it's likely volatility is likely to be sold, right? So uh, when we come down here, and if you look at right where we were, this yellow line. Um, Represented 480 on the Qs. Just drove it down from 485 to 480. That's about 200 points, and then right back up and just going sideways. So institutions just took that chance, and once they saw people selling the VIX, they all jump on that same bandwagon and take it up right back to where it was and a little bit lower actually, and just that was it for the day. So it doesn't mean that's going to happen every time. I did warn that this is a potential volatility area for the market, right? Between now and when earnings start on Friday, October 11th. And then they really don't even kick back in until the following October 15th. There's a couple banks on the 11th, and then we have the weekend. Then Monday you come in, there's nothing, and then that Tuesday, the 15th, there's some more. That's when earnings really starts. Uh, but so between now and then, that's almost 3 weeks. Uh, a lot can happen or nothing, right? So uh, we have. Let's just get into it. So what did that do to structure? It did absolutely nothing to structure except for clean it up. If we look at the news, um, we have nothing going on today. We are going to have, if you are someone who trades to near the closing today, there is a Fed speaker, going to print. Usually, once the closing bell comes out, there's a lot of things that trade between 4 and 4:15, and that's for whatever dumbass reason. I think it's more to screw the retail and trader, that things parse out at 4:15, not at 4 o'clock, for a lot of option activity. So between 4 o'clock and 4:15, you could get some movement, and that I think would be totally unplayable movement, by the way. So I think what I'm trying to say with this long-winded thing is you want to make sure you're flat before 4 o'clock today, and whatever. The day's almost done. You shouldn't be in anything by that time, anyways. To be honest with you, I've got timers set on my trades that my account's just basically flatten every day at 22 minutes after 3. Don't ask me why I picked that dumbass thing, but that's what I did. That's when I flatten up uh, for the day, and that's usually good enough. Once in a while, I'll cancel that if I think there's something else in play, but normally, if I'm still on something, that's just my shot to say, hey, look, dumbass, it's time to. You should have been done by now. You're done now. So, anyways, tomorrow we're going to have final GDP. This we already have preliminary GDP. Unless there's a big difference between the preliminary read and the final read, nothing's going on there. But you do have a couple. That's a two-star event, just because it's final. And then you got unemployment claims, which is always a one-star event, and then you got durable good orders, which is a one-star event. So there is a little bit of stuff going on tomorrow. I don't know if that'll prevent them from selling the VIX if we get a pop today, to be honest with you. Tomorrow morning or tomorrow session might be a little bit different. They might actually hold that VIX position into Friday. And again, I think this Jerome Powell thing, I'm going to be flat. I'm not going to trade while these pre-recorded opening marks are going out. But just because it's close to the open, anyways, you always get a little bit market on open volatility. Uh, so I'll be sitting on my hands while that's going on tomorrow. But I'm expecting it not to do anything that's going to cause the market to start a new trend, either up or down from this consolidation we're in. That's not going to be the catalyst. And then we're going to have Yellen on tomorrow, and we'll remind this tomorrow as well. And then Friday is this is the data event for the week. This is what they're selling volatility into. In my opinion, this is the Friday. I'm not going to get into positioning. There's really nothing going on. 485, could be about the top of where we're at. That's about what we've traded up to. After coming down, that's about the resistance we're at right now is this 45 on the Qs. Looking at the rest, you got 570 to 571 is potential resistance for the SPY. We're trading 571 right now, so you either need to screw right all the bears today and go up to 575, which will only be about another 40 points higher. Which hey, on a slow day, that's not bad money, but more than likely, this you know 10-point range is going to be just a bear, and we could slide, anywhere. If we lose that, we could slide the 50 points down, or if we get above it, we could slide 40 points up. And then I think you want this to shake out, and I'll probably get a few false breaks below 570, above 571 before it does anything. Uh, and then the same with the cash. And keep in mind, we are coming in. I didn't update my chart. Maybe I'll do it just because I've done it for so long. But you've got the large position for the JPM hedge. That's their product they offer customers. That is at 57.50 on the cash market. The cash market closed yesterday at 57.32, so that would be uh, almost 33. So 17 points under. We're down 2 points. So they're significant. Keep in mind that the market makers make out if they can close on Monday, September 30th, if they can, push this up a little bit above there, they'll make just a smidgen more money off of JPM uh, than they would have if it closes below there. But that's your pivot point, and you could get a burst, uh, either way. But for us as traders, what we want to watch is if you get, for some reason, between now and Monday, the 30th. If you cross above this by anything, if you cross back below it, it should accelerate below. That's the real trade maybe, and that would be the catalyst to get a lower move potentially. So we'll have to keep that in mind that that's on the table. So I'm gonna just go straight to these indexes since I started off late with my distract. I was just not paying attention again. Sorry. So we're in the middle of value right at unchanged. We're in the middle of value on the Nasdaq right at the point of control. We're at between value area high and the settlement in the value area high zone as I draw it for the ES. And after looking above value but not the previous day's high, we're back to value area high on the Dow. So I will go back to this chart one more time. And again, this is 4 days. Will we put in a fifth day of bounce? Potentially. And keep in mind, this is all one area on the chart, these 4 days. And we are at the top end of the range. So the normal scenarios exist, right? We could get a look above and go. We could get a look above and fail, which I think would be uh, potentially more on the table since we have news coming out Friday, but you never know. Uh, just watch that scenario, and we could get the look below and go, or the look below and fail. So I think, to be honest with you, because we're at the top of the range, um, it would really have to be a smoke show to start the day to get down there and get a go. So we'll just have to see. The bottom of the range could hold once again if we do get that test down there. So nothing really doing here. If we do get some, extended up move this morning, push over yesterday's high at 20,212, you're looking at right about this 20,321 to 20,370. This is where the algos will want to go uh, to clear these single prints or at least trade some of them. And there's really nothing else on the books here for anything near where we are on the charts that should be a draw like that. I hope this helps. You guys have a great day, and we'll talk to you tomorrow.